Okay, guys, welcome to essentially the Wyckoff laws video, and I am going to touch up real quick on essentially this first, the price cycle. So I used to not believe in this, right? Because for the most part, you guys see that markets don't necessarily move in this manner from an intraday scalp perspective, right? Because if this model was essentially continuing like this, right, that would mean that price continuously goes up and down, where that's kind of not true, where we see more upside sometime, more downside sometime. But in terms of the overall picture, you do see essentially this price cycle come into play. Like for example, right, with Euro USD, right, from an overall perspective, this is a 3-month chart, right? The price cycle, as you can see, right, accumulation, distribution, right, and you could even say accumulation again, so that we can then distribute again, right? So for the most part, you do see that essentially that upwards, downwards, upwards movement, right, that is presented here, right, where essentially accumulation oversold then creates a markup. So to them, we are overbought and then marked down, and then obviously the repeat of the repetition of this cycle, right? But that's not really the biggest point in this video. This is honestly just something to reference, something cool to notice, in my opinion. It's not something that will, in my opinion, increase your trading abilities, but it is something that's good to note. As for the Wyckoff laws, right? Okay, so there's three main laws. There is the law of supply and demand, there's the law of cause and effect, and there is the law of effort. Okay, so right, law number one, supply and demand. Right, so supply is essentially the quantity present, and demand is the quantity demanded, right? The quantity that the consumer wishes to buy. So it's always an inverse correlation, right? As demand increases, supply decreases, and vice versa, right? So from a raw perspective, this idea is primarily meant for stock analysis. Why? Because as supply of a stock decreases and demand increases, price will rise, right? But there is also demand and supply, right, of a specific currency, which is why we can use the same quote unquote ideology in the currency market. Um, right? So, how do we apply this law now, per se, in currency trading, right? As we analyze trading ranges, we're observing either conversions or continuations, right? Accumulation distribution or reaccumulation redistribution, right? Of supply and demand through volume, effort, and structure, right? Effort we're going to touch on, which is law 3. So we'll just wait a bit on that. But in terms of supply and demand, that is essentially how we use it in trading. We focus on the volume, the effort, and the structure. Okay. Law number 2, right? Law of cause and effect. One of the more interesting ones. I used to sleep on this um, right around like the launch of RCV, and prior to that, I never really saw much value in the cause and effect. Not until I started really focusing on honing that logic side of trading. Um, in terms of, in direction with relation to law 1, in order to achieve a result in effect, right, cause and effect, a result, right, you need a cause, you need a catalyst, right? So there could be a small cause, there could be a big cause, right? A small cause will equal to a small effect, right? Whereas a big cause will lead to a big effect, right? So they complement each other. For example, right, you can't expect in M1 accumulation to give you an H4 impulse without other catalysts supporting that, right? So when you have an M1 accumulation, expect an M5 result, an M5 impulse, right? But when that aligns with your multi-time frame, multi-structural level confluence, then that's how you make it all fit together and create, those massive moves, right? So now, for example, a longer term accumulation will lead you to a massive result. Just look at the monthly chart on gold, right? We had a 6-year accumulation and we had a massive result, right? And that's just because of that that catalyst, I'm sorry, right? Cause and effect, right? So this is also kind of where P&F chart can be a bit useful due to the horizontal counting technique. So you can measure targets and all that. But liquidity could just be your target, so you don't need to focus too much on that, like I said, right? However, right, you should primarily focus on the momentum, right? The momentum in the time frame shown, right? Because this is where, I'm sorry, cut that off. I just focus on the momentum and the time frame shown, right? I don't really need to look into PNF charts because I have, other things that are quote unquote substitutes. Okay. So for the people that don't know, right, the quote unquote if this then that logic, right, that we essentially use, right, was derived from this law, right? If this then that, right, a cause and an effect, right, kind of makes sense. So this is where that was essentially originated from, right? It's simple, but I think it's very powerful because it dives into that quote unquote it has to make sense type of logic, right? Because if you can't justify what you're trading, it's hard to have a favorable outcome, right? Unless, you're relying on luck, right? Which isn't what we're doing. Okay, so law number 3, right? Effort versus result, right? And in my opinion, this is one of the most important, if not the most important rule that you must know. Not in terms of knowing exactly what it is, but how to apply it. So in simplification, right? In order to achieve result, volume must be in harmony with price, right? Effort in the form of volume will drive price up or down, right? So inside of a schematic, you want to see that transition through volume, through price, and structure, which is, kind of quote unquote momentum per se, right? And this is what quote unquote optimism is, right? Because you're correlating the volume and the momentum together to inside of a potential schematic or inside of a schematic, right? To get a type of bias, right? And that is also, can be referenced as showing its hand, but that now that we're essentially implementing, that volume aspect, right? That is essentially what I call optimism, which is why you only see me use optimism inside of a schematic, right? And don't be too linear about optimism, right? Just because you see an impulse and you don't see, high volume doesn't necessarily mean it's not optimism, because if you have diminishment and then you have the optimism or the quote unquote showing its hand show itself, I still see that as optimism because volume is supporting it in a different way, right? So just be creative with it, but also be aware, of all the other aspects and make sure that they essentially become in harmony per se. Hopefully I said that right. But yeah, essentially you want to read the correlations of volume, price, and momentum and structure to help determine your bias, POIs, etc. Right? So in short terms, right, the law of effort, right, measuring the correlations between volume and price. So I actually have a small example here, right? This is actually very recent at the time when I'm making this video. And as you can see, right, we essentially have, right, our low or high, or low or high. We have a continuation in terms of upside, and this is on H1, so this is a pretty big move, right? So we have that, but, right, we have no volume supporting it, meaning this move is not in harmony, right? Because we aren't in harmony, it's hard for it to sustain itself because the effort carrying it is very minimal, right? So what is going to be the cause? This is actually an M5 distribution schematic, right? So we now have a cause, right? A supporting cause. We now have an effect, right? If price continues higher, and if we have a schematic, and if we have, essentially this volume here diminishing, right, then we can expect that bearish movement and we can anticipate that reversal, right? So you have to correlate, everything, right? And then once you start seeing bullish volume start to come in again, now, right, you have the disruption, you have the breaks of structure in place, right, on top of a distribution. So now that we have high volume but low movement, we have an instability in terms of bullishness. So naturally, you can only expect downside, right? So you have to correlate your structure, your volume, and your momentum, right? And of course, price itself, right? Correlate all of that together, and that creates essentially a justified position. And even if you're wrong, at least you were able to justify your position, and you're probably going to be able to figure out what went wrong. Okay, so that pretty much concludes this video, and I think we will now cover every other schematic that or pretty much all the schematics that I didn't cover, right? And then I'm pretty sure I have a couple more videos after that. But other than that, I'll see you guys in the next video.